be the first person over the wall. The key thing right now is just that we get a little bit of positive news that shakes out all the shorts, and we're right back to where we started. Just looking at FinViz, taking a quick look at the futures, and woof, we're back above 6,400. And it doesn't feel like there's anything really great going on, right? Because at the end of the day, if you think about what's happening with the jobs numbers, what's happening with, I don't know, broader economy. Well, we just got Apple to put $100 billion into the economy. So therefore, markets go burr, markets go higher. Russell 2250, despite the fact, and this is the funny thing about this, despite the fact that the Russell 2000 is sitting in negative momentum territory as we monitor it, because there is an immense amount of selling pressure at the bottom side of the equity market. I want you to pay very close attention to the fact that the relative strength index on the Russell right now is above 50. MFI is down. The money flow index is down. So there isn't the volume to actually support this. We're going to be paying very close attention to the MACD over the next couple of days. ADX matching up, aligning. This market's just finding support in places that we don't anticipate. And this is why it's very, very difficult to be a bear unless we start to see the broader market breakdown. Liquidity remains ample. The FNGD, which is our line in the sand, is now 6% under the 20-day moving average. Yeah, this is a trader's market, and it will be a trader's market over the next month or so. All right, we got people coming into the room. Thanks, everybody, for joining us today. Hey, Fall Hall, I believe that you put the PH in there for the fun of it. Are you a fish fan? We can do this all day. All right, real quick, as I say, Thursdays, I'm going to talk about a baseball card real quick. This is your 1954 Jackie Robinson, and I think Eric in Northport would probably know something about this card, but this is one of the most iconic cards out there. This is 7 years after Jackie Robinson came into the league. And why does it matter? Well, that yellow background is very vibrant. It is the peak of the Topps Bowman rivalry, because back in the 1950s, keep this in mind, just like we have these wars today of who can we sign away for bases for Under Armour versus Nike. Well, they did the exact same thing with baseball cards back in the day. And it's relevant because, well, this was the second year that Robinson was part of the Topps crew after they signed him away for Bowman. And it really shaped baseball card history. And it is a reminder that illiquid assets are still great assets. Guys, every day you get up here with me, and at 8:50, 8:45, we start talking about the market. And we talk about it because the prologue that I started with this morning is a reminder that you have to know if today is a trap day or it is a day to actively trade. And right now, as we watch it, there is money flowing into this market, but the volume remains a little bit subdued. We are still on high alert. We are still concerned heading into the CPI numbers next week. We still have earnings reports coming out, and then we still have Jackson Hole coming up in a couple of weeks. We're paying very close attention to the strength of the dollar, and we're paying very close attention to the macro news. And keep in mind, after we saw yesterday's continuation of just support wherever they can find it, the most important part about this is understanding where smart money is positioning and where money is flowing and how money shifts when that 9:30 bell opens up. So if you're not joining us before the market opens, you are the exit liquidity. Real quick, on top of what's going on in the broader macro side of things, Trump has announced, 100% tariff on semiconductors with exemptions, because we got to have exemptions. It's important to have exemptions. Allow everybody to know exactly where they're going to be able to exploit this trade. On the semiconductor side, we watch the SOXL. This is the triple bull ETF for semiconductors, and I just want to point out that this is hovering right around its 20-day, right above its 50-day, but volume's not there. The MFI continues to drop, RSI looking to rebound. What is relevant about this? Well, it signals to me that there may be a nice, slow, strong burn on semiconductor stocks over the next couple of days, but it's going to be very, very difficult for this rally to sustain, given the fact that there isn't enough volume. I want you to keep a very close eye on Apple. I want you to watch NVIDIA, AMD, and then this comes up, INTC. This is Intel down 3% after the President of the United States put out a social media message arguing that the CEO of the company should resign. Now, I don't have any views on this. I'm pointing a camera at it, and I'm wondering, is there an opportunity to make a trade on Intel based on that statement? And to me, the answer is absolutely yes. And what we're going to be looking for is some panic out of the retail side, the people who've been trying to buy the dip on this stock. And I'm going to look to see if it is possible for me to trade, maybe even sell a put spread on Intel under the levels where this stock has bottomed out consistently over the last couple of months, going back to late last year. So bring on the weakness. I will look for a reversion on Intel. I don't necessarily know what the outlook will be, but I assure you that on the other side of this, there will probably be some sort of panic followed by an opportunity to step in and trade it. Don't worry about Intel's underlying fundamentals. Don't worry about what Intel does. Just simply look for the reversion and the possibility that there is money to be made today on Intel because of the broad overreaction that may come from institutions and retail traders. I will be talking about this pretty much the entire day. Pre-market movers, Duolingo, don't know what you do, but you're up 25%. Celsius is up 20% in pre-market trading. If you haven't drank this and you really need a charge to your day, that is Celsius. It is a very, very strong company in terms of its capital efficiency. It has just absolutely ripped today, 25%, and it just continues this strong momentum charge that it has. I would not be buying into this rally. I would be waiting for some sort of market moves. But we dug a little bit yesterday into consumer defensives. It's really interesting to see that certain companies are outperforming in this environment while other consumer defensive stocks are getting absolutely smoked in this environment. Consumer defensive stocks over the last month, despite the broader rally, despite the strength in the market, are effectively flat, 0.8% over the last month, but over the last 3 months, completely flat, 0% gain in the last 3 months, despite all of the rally, despite all of the moves higher. This is signaling weakness in the broader economy and deeper concerns about the underlying balance sheets of many companies, including names like Conagra Brands that I looked at yesterday. CAG, this is a very serious chart. I think this is one of the worst charts I've looked at in the last 2.5 years. And just to bring you up on this, this is the company behind Slim Jims and ReadyWhip, the bare essentials. This company has awful financial ratios, and pretty much all of it has to do with the fact that inflation remains elevated, that there are concerns, again, about interest rates. These are the stocks that are supposed to do very, very well when we are at the end of a liquidity cycle. But unfortunately, what we're seeing is this continued burn off, and it is a sign that money is simply rotating heavily into the Magnificent Seven, where the leverage exists. But the companies that actually make the stuff we need, like food and Slim Jims, yeah, they're two different things, continue to burn off. The consumer defensive weakness is a canary in the coal mine for the broader market heading into 2026. And as I see this, I am not trying to call the bottom on any of these names. I am simply sticking with where the momentum remains. But I want to point this out. This has always been a darling in the household of Baldwin. We have always liked Conagra Brands. I have a soft spot for a lot of these food and business companies. But this chart is telling me that there is something wrong, and a lot of it has to do with monetary and fiscal policy. The other side of this, what do you do with that, by the way? If you're trying to buy the bottom on any of this, don't do it. Don't do it until you get above the 20-day moving average and try to trade it to the upside. And if it does break back down or it does hit its 50-day moving average, remember the trend of this is lower highs and lower lows. This is not a buy. It will only be a buy if it can get back above its 20 and its 50-day moving average. Global markets are lifting on rate cut optimism and the Bank of England watch. Let's keep the cycle going, everybody. Let's just keep reducing the value of our currency so that all risk assets move higher. That's what we're doing. Asian markets are up while the dollar continues to weaken. And I know that Blake and I have been talking about this, but right now, as we look at it, we're going to go to the UDN, we are broken back above our 20-day moving average, and the dollar is weakening. That is bullish for stocks. It is bullish for commodities. It's bullish for everything that is not nailed down, which is a reminder that yesterday I told you, look at IAG. IM Gold. Gold prices continue to move higher. IAG breaking another 1.5%. This was on our watch list yesterday, as was the good old Fortuna, FSM. Fortuna breaking down a little bit today. Silver price is moving lower, but gold price is moving higher. This is going to remain a very interesting trade for the next couple of weeks. We're paying very close attention to what the Fed is saying, and we have the Bank of England rate decision as well. What happened with the Bank of England? Why do you care? I don't know. Reality is that at the end of the day, it's all about easing. It's all about finding a way to keep money flowing through the system. The Bank of England this morning cut interest rates to 4%, and that is usually a precursor to what we can anticipate here in the United States. So that September odds that we talked about, CME Group going there, we are now at 93% for September for a rate cut. More importantly, go out to March of next year, and you will see that the market is pricing in even more aggressive cuts with a 35% chance that we are down 100 basis points from where we are right now come next March. The market is perceiving economic weakness. It is perceiving a lot of concerns around the state of affairs. My chief argument here is that you have to be very, very conservative about these numbers, largely because the last time that we had this conversation, they didn't cut rates, and that was in 2024. And we did this in 23, and we did it in 22. We have not seen the follow through yet, and Jerome Powell has already suggested that normalization toward that 2% inflation target rate will not be realized until 2027. That was a rehash of things that he had said back in 2021 and 2022, where he said that we were not going to hit the inflation level until 2025. Well, here we are, and we have not gotten there yet, and they are still behind the ball, and we continue to provide ample liquidity to the financial system through short-term T-bills. As a result of that, we are not getting anywhere close to that target, so I do not have faith in these numbers, and I think that we probably are only going to see 50 basis points at most heading into March of next year, which is going to create a little bit of volatility and a lot of uncertainty around a lot of those other stocks, particularly the consumer defensive stocks that I already named. We are not under a duress point yet with momentum, but I am actively looking for the opportunity to short this market as it emerges. All right. 9 o'clock, everybody. Hope you're having a good day. Dual lap, 1/3. Talked about AI on the call. Well, Mountain Mike, guess what? Stocks like that can just keep going higher. That's the funny thing about it. And the questions for you today is, look, you paying attention to the stocks that we're putting on the list each day? IAG burning higher. I think, again, it just comes down to understanding that even in the expectations that we have, as bearish as we want to be, as much as we want to effectively look for the connection between monetary policy and the broader economy, this market can just keep burning higher simply because of the amount of money that's on the sideline and because of the crowding in the Magnificent Seven and the other stocks that continue to provide ample support for this market. My next thing that I want to bring up today, what's going on with ARC Innovation? I talked to all of the members of our special masterclass around Tesla yesterday, and I actively want to short this stock badly. I just don't get it. But as I said, there are these days where you see what's happening with capital flows and you see what's happening with money. And even though I think shorting ARC Innovation into September is going to be brilliant, we're not there yet. And you have to be very patient when it comes to shorting because once again, ARC is back above its 20-day moving average, despite the fact that the RSI is moving higher and the MFI is moving lower. And you have this histogram with the MFI suggesting weakness. We are back above key support levels. The sell-off was not that long. It's getting a little bit more of a burn higher. I think there is going to be an opportunity to short this, but I'm not going to do it yet. I can't commit capital to short something, specifically if I have rules. Remember, I have very specific rules around how I trade. I keep very tight stops. But why even waste the 10% loss or the 15% loss if I don't have the true conviction yet? This is very important. This is how you have to think about markets because my thesis on ARC Innovation remains the same. None of the executives are buying their own stock. And if the executives aren't buying their stock, why is Kathy Wood? Well, again, it all comes down to momentum. ARC Innovation ETF is a pure momentum ETF, and it is based heavily on flows and leverage in the system. The last time that our signal went negative was February 21st for duration period, February 21st on the S&P 500, while ARC followed it lower, and it followed the exact same pattern of the S&P 500. This thing got cut nearly in half, right? Moving from 67 down to 39. But right now, a little bit of a squeeze. Capital remains strong, liquidity remains strong, and the opposite thesis is in play. This is where algos step in and bid. So I pulled the trade yesterday. I did not try to short this company. I still think there is going to be ample opportunity. I think it's going to be one of the best trades of September is going against ARC. However, buying into options right now and trying to make a short side trade right now does not make sense. So we're going to wait a little bit. We're going to let this get a little bit more stretched. And then if we can get back up to around that 78, 79 level, that's where I will take the one direction move against this company. Is it contrarian time? Well, once again, as I said, we were talking about Conagra earlier. If you look across the board right now with a lot of these names, a lot of people are asking, is it time to take aim and try to go long on some of these consumer defensive stocks or even trade them? The reality is that we are not near the top of this cycle yet. So it's very important that you be patient. Again, I like this company, but if you look at its current ratio, if you look at some of the other metrics that actually matter in finance, it just keeps getting beaten up. And the trend is lower highs and lower lows for the foreseeable future in a lot of consumer defensive stocks. Pay very close attention to moving averages. Pay very close attention to see if there's any momentum in any of these stocks. And more importantly, pay attention to what the insiders are doing. Are you seeing in any capacity stocks that are moving higher in any way simply because we have large institutional purchases? The reality is the insiders are not stepping in at a great level just yet. We pay very close attention to this chart, which I continue to argue is the most important chart in finance. Insiders are not buying. So if we look right now at what is being purchased and we go to a simple screener, you're going to see that CFOs, CEOs, COOs, chairmen, other chiefs, presidents, vice presidents, directors, 10% owners, and others are not stepping in and buying their own stock in the consumer defensive space. And if that's the case, if they're not buying their stock, I ask the same question that I asked Kathy Wood. Why are you? Don't try to catch these falling knives right now. You're seeing big sales in Celsius and Keurig and Kellanova and BJ's and Hershey, and no one is buying their stock in the consumer defensive space. Walter saying on KAG, just a thought, Dow cut their dividend last week, conserving cash. CAG has a 7% dividend. True, they do, but they also have a stock that just continues to fall out of the sky. Haynes did the exact same thing where they cut their dividend completely, and stock still went from 6 to 3 relatively quickly. So just be very cognizant of this. I want you to wait. I'd really suggest you do so. Don't try to just buy these things because they look cheap. Understand the cash flow situation. Look at what's going on with the underlying metrics. I know we spend our days heavily focused on the technicals, but the dive in yesterday into the balance sheet of Conagra completely and totally shook me. It's something that I have not done in years. I have not sat around and done Ben Graham style security analysis in a very long time. But the open conversation that I had yesterday with Walter, with Daniel about Conagra on air, it legitimately shook me because it made me realize that the current situation is much worse than I thought it was. And we have to have a deeper conversation in the future about what is going to be the end game here when we start to see consumer defensive stocks. Nobody wants to rotate into them. Nobody wants to buy these companies. Keep in mind, like, they make food. What does Tesla make? Electricity. Okay. Batteries, cars. Cool. What does some of these software application companies make? Nothing that we need. The things that we actually need are trading at outrageous discounts. We have 32 companies in the in the Russell 2000 in upstream oil and gas trading for less than their book value. That's a problem. That just shows the incentives of the financial system right now, and it shows the underlying weakness that people are not paying attention to because we are constantly drawn into the FOMO of technology stocks, communication stocks, and even consumer cyclical stocks that are what drive the momentum in this market. So pay very close attention to this. I apologize. I am not showing you what I need to show you. Thank you. I appreciate you pointing that out. Here we go. Right there. Consumer defensive. These are the consumer defensive buys from yesterday. Sorry, Bob. Sorry, guys. So right here, look, last 10 days. Let's go back last 30 days. Nobody's buying. Constellation Brands. Okay, a couple small things, but look at the $42 million in sales on Celsius, Keurig, Hershey's, Hims. Hims getting smoked, by the way. Very important. So be cautious in this environment and just be aware that, the purpose of the market is supposed to be around capital for growth, and it's just not happening. All right, 910, broader market, real quick. We are in a very high pressure situation in this market. On the S&P 500 reading, 40 more stocks than are breaking down than breaking out. Again, poor man's momentum version of this. The thing about this, which is really, really difficult, is that selling pressure on the S&P 500 has been high. But the reality is that it is the upper band of the S&P 500, the Magnificent Seven, that continue to see crowding and a lot of pressure that makes it very, very difficult to try to short this. This is why when we look at this figure right here, we then flip over and we look at what we have talked about before, which is the FNGD. And again, the FNGD is an inverse ETF that is completely dedicated to, I don't know. All I know is that when this thing breaks above its 20 and its 50-day moving average, that is where we see a lot of deleveraging in the financial system, and we see a lot of deleveraging in the FANG stocks. This crisis that happened in April, well, it all happened after we were above the 20 and the 50 on the FNGD, and I'm always looking for this to happen in broader markets, because last year when it happened in July, well, a couple of days later, the Nikkei had its worst day in 20 some years. We still don't talk about that. Don't talk about it. Whatever you do, don't talk about it. Right here, 2023, 10-year bond move higher to the 5% level. This is the backside of the gilt crisis that happened right here. And this all involves unwinding of leveraged positions. Have a good day. All right. Sorry, my daughter's saying goodbye to me. Where are you going? All right. Have fun. This is the largest hedge fund sell-off in 15 years right here. And this is basically, you know how it goes. This is COVID right here. So FNGD is our signal. We just basically take this number, and when it goes the other way, we look at the FNGD to understand, is this at the top of the S&P 500 or is it the bottom of the S&P 500? On the backside of this, the Russell is red, significant selling pressure on the Russell. And it's weird because people aren't paying attention to it because they're seeing, the stuff that I've talked about in the past. One of the top things that we have recommended since we have been on air was BTBT, which was a big insider buy that transpired back in July after the sell-off. This is an Ethereum company. I don't know anything about it. I didn't care. All I simply noted was I rarely saw insider buying activity like that. And as a result of it, this stock effectively more than doubles. I know that people made some money off of that. That's the entire purpose of the show. But if you look at the other side of this, look at like USPT, right? Upstart Holdings, another financial company, crushed. Dave, more technology names, the companies that are in the software application space, crushed. Consumer defensive stocks, which I keep talking about, Hims and Hers, getting beaten up, breaking down. Very strong momentum stock, by the way. Always trade this around its 20 and its 50. If it breaks above, go long. If it breaks under, go short. But again, it's just pointing out that there is ample weakness in the Russell right now, and we are not seeing an acceleration in selling just yet in the S&P 500. We are really seeing a breakdown in the buying pressure, and that is what matters most. We have four sectors that are moving higher, and as a result, a lot of it has to do with the US dollar. Basic materials has rebounded. I want you to keep a very close eye on names like SSRM, SSR Mining, IAG, and if you are a long-term gold bug, Sprott Gold. This is my go-to. This is where I, instead of buying physical coins, I just invest in this closed-end fund. All right, so got 6 minutes left. Pacing pretty good. Strong BTBT continues its strength. CCJ. Remember, there's going to be a lot of commodity names today in focus. Cameco breaking above that 20-day moving average. I like this as a trade. I like buying around the $75 call and selling up to the 80, looking for continued strength in uranium after that recent sell-off. This has been a fantastic momentum move, and you are just simply looking to trade it above that key moving average. SkyWest, my all-time greatest win ever. What do? Well, you're a regional jet company. Right back above that 20, looking for that strength, looking for continued move, possible move back to that 120 level. VST. I'm not a Vistra Corp guy, but I do pay attention to it. I'm looking for a move off this 50-day moving average as a possible reversion because of the utility space. On top of that, on the other side, Upstart, which we already talked about, Hims breaking down, Disney post-earnings weakness. It is not remaining strong. And again, they are ruining sports one day at a time. Continued weakness. I want you to pay very close attention to this MFI. Move it down to the 30-minute chart. I think there's more weakness. I think we're looking at a channel of this possibly moving down to around that 105 level in the next couple of weeks. And CUBI, don't know what you do, don't care. But, oh, yeah, it's Consumers Bank Corp. Regional banks just continue to see weakness. Pay attention to the KRE. If the KRE is able to get back above that 20 or 50-day moving average, it's good for regional banks. But right now, there's something wrong in the underlying. We've been talking about this for 2 weeks. On top of this, we'll look at Kohl's, KSS. Ugh. Gosh. Paper clothing, everybody. If you need some paper clothing and back to school, you have a stock that is just not there right now, hovering around that 20-day moving average. It can squeeze, it can move higher. This has been something that I know that Brandon's been on top of for the better part of a month. But right now, just paying very close attention to the flare around the headlines. It might actually be a positive bullish trade. On top of that, FSM and EBR. Don't know what you do. What do you do? What do you do? You're a Brazilian renewable company. I don't know why you're on my screener, but you are, and positive breakout and pushing back toward those highs that we saw of 780. All right. All right. Eric made some money. That's what matters most. That's what we care about. All right. So we got 4 minutes left. I just want to continue to remind you to pay very close attention to momentum in this environment. It is very, very tricky to try to call the top of a market. I have not tried to do that, but it is a reminder that the U.S. dollar seems to still be the key narrative in control here. Gold prices up to 34.56. Why does that matter? Well, as we've said over and over and over again, look at this chart. Look at this momentum. This is currency driven. And you might not be a gold bug. You might not believe that, what are you going to do in post-apocalyptic times? Throw it at somebody and eat it. The reality is this chart is a true representation of the debasement of the U.S. currency and the global currency as well. Gold continues to remain strong, significant buys by central banks over the last couple of years. And resultantly, as we see this weakness persist, the reality is that a lot of these downturns, these short-term moves around the 50-day moving average, have become buy the dip moments. So just pay attention to that. You might hear some chatter. Bank of America has said that gold prices are going to 2,700. Look for that. Look for that to not happen, because as all roads point to monetary inflation and more money being printed and more efforts to prevent a debt deflation spiral and more money at the up front on the way that we finance our government, gold prices will continue to rise. It is a buy the dip opportunity. And I think if you were to go out over the next couple of months or next couple of years, just simply pay attention to the GDX. You don't have to be a gold bug. You don't have to believe anything that I'm saying. All I'm telling you to do, though, is to simply look at the GDX as it runs against its 50-day moving average. If you get a pullback, and trust me, yes, you're extended right now. If we come back here and we're back at, say, 54 in a couple of weeks, I want you to go back to this moment. And I want you to just see there is an opportunity to be contrarian off of the selling and step in and set a line in the sand and make a cheap trade to the upside. 3 to maybe 2 weeks out, where all you're going to do is do something like what Don does, where you're selling premium down here and you're buying a call. And in the event that it chops around here, you're going to be able to take the credit that you made down here and apply it to the call option and make money both ways. These are the types of trades that we talk about every single day. I'm going to be here at 1 o'clock. We'll talk a little bit about that concept, but this is one of the reasons why I highly encourage you to be with us. 9:30, Don kicks it off. We're here all day. We're kicking around ideas. We're talking about trades, and we're providing you with actionable insight that you can use to take advantage of what the market is giving you. On top of that, I have to tell you, just look, there is a link at the top for Ghost Prints, the surveillance console. Brandon is just absolutely knocking it out of the park. And if you really need intelligence, you need insight that you're not going to get anywhere else, I highly encourage you to take a little bit of time and just click the link and listen to what he has to say. Ray, you said, what's the gold ETF? It's a closed-end fund, actually, just so that you know. It's the PHYS. It's called the Sprott Physical Gold Trust. It is a Canadian-based closed-end fund. that is effectively buying into shares of a giant pile of gold. I hope everybody has an awesome day. It seems like on this, once you get above VWAP bound, yes, that is true, Bill. All right, 9:21. Everybody have a great day. I'm going to be back at 1 o'clock. On top of that, if I do not have a conversation with you today in the chat, do me a favor. Join me tomorrow, 8:45. We do this every single day here at TheoTrade. I hope you guys have a great day. Thanks for taking the time to join us. I will see you tomorrow. Take care.